Hey, what's going on, fam? I want to talk about Clearfield. So recently, not too long ago, I put out a video on Clearfield, and um, I pretty much put out like a little bearish thesis. Now, I do want to go back and follow up with Clearfield. Um, well, first of all, the whole market is dropping. Okay, and when the market is dropping, everything's going red. I'm I'm like a wolf in the hen house. I'm observing chicken. All right. So I'm going no stone left unturned. I'm looking at all as much details as I can. I'm doing way more researching. And in that last Clearfield video on my initial analysis of due diligence, I mentioned their debt, as far as their not their debt, but their customers' debt, and pretty much their capex and their ability to qualify for the BEAD program. And I had doubts there, but what I didn't do was I didn't go into the actual. I didn't actually go into the customer 10Ks and look at the debt maturity walls. And when the market started tanking, I saw support for Clearfield all around this 24 through $26 range. And that's not to say that it's not going to go down more or go back up, but because I see we got the little dead cat bounce. It goes up, and we're going to bleed right back down to around 24ish. If I had to guess, I mean, I don't have a crystal ball, but looking at the technicals, I can kind of see it going back down. Fundamentals are going to truncate everything, though. They do have earnings that they're estimated to report in November, like November 3rd-ish. So we'll see what's going on there. Now, I want to say, let's look at. I've listened to more conference calls, looked at some filings, and looked at their customers' free cash flows, net incomes, and I've pretty much come up with the conclusion with their actual maturities and how much is coming due as averse to their balance sheet and free cash flows, at least for Verizon and all the other customers. They got enough free cash flow to service their debt, pay the dividend, and continue their capex. Even if capex goes down by a couple billion, which they mentioned on some conference call, it's still okay. All right. So actually, I'm surprised Verizon is presenting a little bit of a value play here. I thought that I looked at initially looking at their debt and not looking at their debt maturity walls and their free cash flows. Verizon is misunderstood. So now I'm thinking that Verizon's undervalued, but the proposition for Verizon is maybe it reverts back to the mean, maybe it goes back to $50, and you get a juicy fat dividend along the way. That's ISS is safe. Okay. Now, the reason why I'm not interested in investing in Verizon is I'm not interested in getting dividends right now. So this is not a tax efficient or in this interest rate and tax environment. I mean, I'd rather just leave my capital up for as far as capital appreciation is more my strategy. And that's not to say that Verizon doesn't have a place, but eventually, I might look at Verizon as a play, but not for me. But that's besides the point. The point is that on my Clearfield video that I posted prior to, I made the assessment that they're going to have problems qualifying for the BEAD program because they're going to have to reservice the debt at a higher interest rate. They're not going to have enough capex to support the actual feeding of Clearfield revenue. I'm wrong. I assess that to be inaccurate. I think they do. So, and with the actual Fed environment, as far as interest rates, I assess a pivot that's probably going to happen next year around Q4. A lot of other investors are assessing a pivot to happen, I'd say in like Q2, Q3. I think that's a little too soon. I think we start seeing interest rates go down Q4 of next year. So that's about a year from now. Beads program, the Beads money is set to come in 2025. So this is actually turning into a visual setup for Clearfield. And you know, when you look at the setup, you have to look at a setup when it comes to a stock. How long do I have to invest and get my position up and running before the good stuff starts coming in? All right. So I look at Clearfield. It's an interesting setup play here. Um, if I were to, I'd say that I have maybe I'd say that I have maybe 6 to 9 months to build a Clearfield position if I was interested in coming in. And then I'm going to have the secular tailwinds of the Fed pivot, of the Beads Act, all in the expansion of the fiber 5G and so forth. All right, there's still a lot of total addressable market. I think someone mentioned on my video in the comments section that could we see support at around this 24 to 26 level. I'm thinking actual real support is going to be down at the $15 range, but you know what? Because there was a high back in 14, that commenter may be right. Maybe we show support, maybe not. Who knows? Um, but that's something to consider now. When the market's all bleeding out and everything's going down, remember I said I'm observing chicken. You gotta move modestly. All right, that doesn't I'm observing. I'm not ready to completely strike yet. So, um, interesting play for Clearfield. You know, if I was to build a position, I'd take 9 months. I'd build it up, and I would kind of play the technicals as I'm trying to go in and purchase chunks of shares. And I do think that they're trading pretty cheap, considering on their price to sales and so forth, as averse to their sector median. Okay, one thing that I do have, and they're so one thing that I do have a issue with, their PE is pretty cheap too. But one thing that's kind of stopping me is this gross profit margin. I'm a sucker for high margins. I love high margin businesses because there's a lot more room at the bottom margin, net income margin, and free cash flow margins to actually give shareholders something. But that's not really too important, because their margin expansion could happen and their growth will be refueled. All right, so we're going right back to it's about the revenue growth. All right, so and I did look at some of the insider trading stuff happening, and their CEO is buying shares. So that's something to be said. Yeah, I just wanted to, but yeah, there it is. I just wanted to follow up with do a quick follow up on Clearfield, and kind of go back and say, hey, that was wrong in my last video. I did more due diligence, even more so, looking at all the technicals and seeing what's going on. So yeah, hopefully you've been following along. I'm going to make Clearfield. I think this is an interesting stock. I'm going to make Clearfield. I'm going to have periodic follow-up videos with Clearfield, and going from there. Now, this next earnings, I think there's going to be some vulnerability for Clearfield. We could see some weakness coming into earnings. So if I was interested in building a position in Clearfield, I'd probably wait until November 2nd. Just wait a couple weeks, see what happens. See what they report, so that the market digests that. Because if I come in right now at around 25 a share, they have earnings. Next thing you know, it's going down like crazy. But that's just me. Not financial advice to anybody as usual. But yeah. Um, hey, if you saw value, hey, you know what to do. Shout out to my subscribers, um, and shout out to all the hustlers and the players in this game. All right. With that being said, thank you, and I hope you all enjoy.